Do you know that 3 months ago, I released a video where we discussed about 3 Singapore companies that continue to pay increasing dividends to their shareholders? And these 3 companies are Singapore Exchange, SGX, ST Engineering, and Netlink Trust. I highlighted them because they are fundamentally recession-proof business models. Whether it's because of the fiber optic cables that is essential for your internet usage or an exchange to trade or invest your stocks. Now, the time of recording is currently February 2026, so it has been a period of 3 months. So let's see how these 3 stocks have performed and if they have kept up to this trend, especially if they have continued to pay out the dividends. So this is fundamentally a business case study of past results. So we are basing on actual figures and data. And if you're new here, my name is Chris and I run a Telegram group of over 22,000 members who are interested in personal finance and investing for their retirement. So join us for free at the free Honey Money SG Telegram group here. Now, for context again, I am not a dividend income investor because of my age profile, and I don't really prefer income or cash flow for my current investment profile. So I'm just providing a case study for people who are interested in dividend stocks, and they may just want a few more case studies to beef up their research to back it up. Most importantly, don't trust any random guy on YouTube giving all these facts and figures. Go and verify all this yourself. So don't take it as financial advice. As usual, we're going to exclude any REITs or banks because of their cyclical nature of their business models and sensitivity to interest rates trends. So starting with our first stock, which is S68 SGX Singapore Exchange Group. So for Singapore Exchange, when we published a video on 1st December 2025, the actual share price was $16.98. And as of the day of recording, is hovering around $18 per share. So you can see some capital gains from that. Now, for the first half 2026 update, if we look at the news of SGX, you notice that the trend is very much alive. SGX has recently reported very strong financial results and announced an interim dividend of 11 cents per share, which is up 2 cents from the previous year. And why was SGX able to pay a higher dividend? Now you see their transition into a multi-asset exchange is finally paying off. They are no longer just about stock exchange listings. Their FX, commodities, and derivatives businesses are also booming on an uptrend. And here's the fact. The management has committed to sustainable and growing dividends for financial year 2026 to 2028 at a 12% CAGR, which is an additional 0.25 cents per quarter. And for now, the exchange monopoly business remains as a dividend growth leader. So if you ask me for my opinion, I feel that SGX is very strong, very confident of their future. That's why they can commit to a higher dividend payout. So that is a strong business and future outlook of SGX. But this is just based on what the management said and past performance. And I want to remind you that past performance is not the guarantee of future stocks. So let's move on to our second stock, which is S63 ST Engineering. And as of 1st December, the share price was at $8.24, and right now it hovers around the $10 range for ST Engineering stock price. Last video, we talked about their massive long-term contracts and how they even maintain the dividend payouts during the pandemic. Now for the 2026 update, they have stayed the course, and the stock price recently hit a new high of breaking up the $10 mark this year. And there is a very good reason for it, which is the recent strong financial results and special dividend announcement, which you can refer here. So the business for ST Engineering is on a general uptrend as well. If you look at what they said, the order book is at a record high at $32.6 billion, driven by strong performance across these 3 business segments: commercial aerospace, defense and public security, and urban solutions and Satcom, which are the core business of ST Engineering, and there is a lot of earnings visibility. In fact, you can also use the Moomoo app and click on the company profile to look at their revenue breakdown and their business model. So this is what you can use to help in your research behind all these companies. So to be specific on the dividend side, the board of ST Engineering proposed a final dividend of 6 cents per share plus a special dividend of 5 cents per share. And if this is approved, the total dividend for FY 2025 will be 23 cents per share, and that is an all-time high again. So this is very good news for dividend investors who are invested in ST Engineering, and as a government-linked company, their focus remains on steady, predictable returns rather than explosive spikes. So it's very good for income investors. without all this volatility of the stock market. But you and I as investors would know that monitoring all these dividend trends requires good data. And last time I showed you how I used the Moomoo SG app to check historical dividend yields. Right now, Moomoo is offering something even better for my viewers, which is free Level 2 US and SG real-time market data until the end of 2026. This lets you see the actual buy and sell wars for stocks like SGX and ST Engineering. Moomoo also supports CDP link buy or sell orders from $4.99 commission per order. And for custodian accounts, they provide zero commission for SG stocks for 1 year. They also have a new user campaign running till 26 March 2026. Now, this is KOL exclusive only because if you deposit 3,000 Singapore dollars using my link, you get 70 Singapore dollars in rewards, which includes 40 Singapore dollars of NVDA fractional shares. But moving up the higher tier, if you can fund a larger portfolio of 10,000 Singapore dollars, you get 350 Singapore dollars in total rewards, with 220 Singapore dollars in NVDA shares and 100 Singapore dollars of the NVDA stock is an exclusive bonus just for my exclusive KOL link. But here's an important note, the welcome rewards only apply if you fund the universal account and not the CDP account. There's also a special Chinese New Year special rewards for both new and existing users where you can just open red packets in Moomoo during the CNY period till March and you can win up to 888 Singapore dollars of trading cash reports. So join Moomoo with my exclusive link or scan the QR code here to get the best rewards right now. Lastly, on our final stock, CJLU, Netlink Trust. Previously, the stock price on 1st December was at 96 cents, and now the stock price is very close to 1 Singapore dollars. In our previous video, we called Netlink a modest but consistent company. Now, moving on to the 2026 financial update, this is where we see a little bit of plateau. Because in their latest financial statements, while the revenue raised by 1.6%, the profit after tax fell by around 11.8%. So why did this actually happen? It was attributed to high depreciation from a larger asset base and higher net finance costs, partially offset by the higher income tax credit. So this doesn't look quite good. High interest rates will ultimately increase their finance costs. And because Netlink is a business trust, they pay out 100% of their cash flow. But let's look at the fact. The dividends are still stable because fiber internet is an essential service. But the growth trend of this business is looking flatter in 2026 compared to the other two companies that we discussed earlier. So it remains as a defensive play, but perhaps not a growth one. So objectively, we can say that comparing all these three stocks, Netlink Trust has weaker fundamentals and outlook compared to SGX and ST Engineering. So overall, for these three companies, SGX and ST Engineering shareholders has enjoyed exceptional capital gains with positive outlook and business fundamentals. But for Netlink business, it has no strong catalyst. It enjoyed very little capital appreciation, but at least the stock price didn't fall from our last video, right? Nonetheless, the dividend payout is still stable or even increasing for all these three companies. So we are still on a good trend for now. If you find all this research and analysis too complicated, you can also use the Moomoo app to look through the financials and business profile, just like how I did here. It even has analyst ratings and Morningstar research, which you can use to do deeper research. These are usually paid subscriptions, but you can get them all for free on Moomoo. Also, you can check out the holdings of bigger institutions like Temasek Holdings under Insights, which could help you discover some opportunities there. So overall, for these dividend stocks, I would say that the trend mostly holds, just that the speed of the growth is shifting. SGX and ST Engineering is leaning to expansion, while Netlink is just managing their higher costs. And as I always say, I'm not a dividend investor myself, so I look at total returns for a more realistic view. But if you're building a dividend income portfolio, these facts are what you should be watching. And if you like this dividend analysis, just comment dividends +1 and then I'll do some follow-up videos after this if you enjoyed this style. So if you want to look at my previous video, why I picked these three stocks based on their business fundamentals, you can refer to my previous video right here.